Pinterest is one growth stock down 68.3% that I think investors might regret not buying on this dip here. I'm going to explain why I think that's the case in this video, so let's get started. What I have here is a chart of Pinterest annual revenue going back to 2019, and what this chart shows is very nice revenue growth for Pinterest over the years, growing from around 600 million in revenue all the way up to 2.803 billion in revenue in its most recent year. Now, I'll make a couple of points about Pinterest's revenue. First, looking at looking across social media companies like Facebook, like Twitter, like Snapchat, Pinterest has the lowest average revenue per user among all four. Pinterest has the lowest average revenue per user. The biggest difference between Pinterest's lower average revenue per user is from its international segment. So Pinterest has a lot of room to increase its average revenue per user from its international user base, which nearly three-fourths or over three-fourths of its overall user totals of more than 400 million are international. So management has only recently started focusing on ramping up revenue among its international user base. It set up offices overseas, hired sales agents. All of this has been recent, maybe a year and a half since Pinterest has started to focus on monetizing those international users. So that's one area that Pinterest has potential to increase to, more closely resemble its social media peers. Another thing to consider about Pinterest's revenue is annual revenue of 2.8 billion pales in comparison to the size of the advertising market. Now, of course, nearly 100% of Pinterest revenue comes from advertising. The site is free to join and use, and so it generates its revenue from marketers. The overall size of the marketing industry was nearly $800 billion. That's excluding political advertising in 2022. That's estimated to grow by 6 to 8% in 2023. So the size of the market is massive. Pinterest has a tiny share in that market with 2.8 billion in revenue in its most recent year, and it's got over 400 million monthly active users. So it's got a large base of users that log on, relatively frequently, and that figure is growing, and it's got opportunities in that segment to increase its revenue. So a couple of things to look forward to if you're a Pinterest shareholder or if you're interested in buying Pinterest stock. That's a couple of catalysts there that could boost revenue and profitability. The next thing I wanted to highlight is Pinterest operating profit margin over the trailing 12 months. That is also improving, getting better since the dip in 2020. Now, the bulk of this dip in 2020 was one time in nature, some costs associated with going public and the like. But as it's lapped over those costs, operating profit margin has recovered and improved. And now recently dipping downward again, negative 3.63%. But it is working on a nice upward trend here. A couple of catalysts that could improve Pinterest operating profit margin is the management team has started to focus on some cost cuts. The company has shrunk its real estate portfolio. Many of its workers work remotely, at least part time, and so the need for its real estate footprint has shrunk. So that's a catalyst that could propel Pinterest forward, along with growing monetization of its international users, could also boost its operating profit margin going forward. The next thing I wanted to show you is Pinterest cash flow from operations over the trailing 12 months. This shows a more pronounced increase and a more positive outlook for the company. Uh, Cash flow from operations rose all the way to 469.2 million. That's from, negative figures before the outbreak. The company has grown to a scale that delivers very healthy cash flow from operations. You look at its revenue, 2.8 billion in its most recent year. It was able to generate 469 million in revenue, roughly a 20-25% rate of cash flow from operations from its sales. That's a good figure and a healthy figure for a growing company like Pinterest. So, you know, improving operating margins, improving revenue, improving cash flow from operations, all positive signs from Pinterest here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason why I think you might regret not buying Pinterest stock on the dip here is because of the reasonable valuation. What I have here is Pinterest's forward price to earnings ratio. It's trading at just a forward PE of 25.9, near the cheapest this stock has been going back to January of 2022, according to this metric. And with the difficult prospects over the last 6 months and the forward 1 year period, which this valuation already incorporates. It already incorporates a difficult year in 2023. So, given those challenging environments in 2022 and 2023, you're getting this stock at a reasonable valuation, already accounting for the headwinds, and then looking forward to growth in earnings from 2024 and beyond. So, for all those reasons, I think you might regret not buying Pinterest stock on this dip here, 68% dip in stock price. All right, so that's all I've got for this video. Thank you so much for watching. I hope you tune in again next time for another one of my videos.